We do expect YCC removal in April 2024, and that does come from a view on when the Shinto wage inflation data comes in. However, I think it only casts a high level of interest in Japanese banks. Banks have rallied about 30% this year, but we think there's more runway ahead. And the reason is that Japan is in a bright spot, and within Japan, it's the bank sector that stands to benefit from two of the biggest themes here. And one is BOJ interest rate normalization, but there's also corporate governance reform for ROE improvement. And in addition, there's fundamental earning power improvement at the banks that's gone largely underappreciated by the market. In fact, two of the mega banks are guiding for 10% profit growth this year and already achieved 40% progress to guidance at first quarter. So, given the sector has a clear catalyst in interest rates rising, as you see here, and also the sector is still trading at a discount to book, and the profit momentum is good, we think there's more room for the banks to re-rate, possibly as much as price book 1 times or beyond.
All right, Makoto, give us some metrics on the Japanese banks. And we started to talk about this offline a couple of seconds ago. I mean, when you take a look at financials anywhere in the world, if you're looking at a price to book of about 1, you're doing pretty well. In the case of Japanese financials, they're trading anywhere between, correct me if I'm wrong, 0.6 to 0.8. That is almost dirt cheap.
Yes. In terms of valuations, we are still trading at 0.6 to even the highest bank trading at 0.8 times price book now. But they were trading at 0.9 to 1.0 times book in 2015, pre-negative interest rate policy. And that was a time when the banks were much more structurally challenged. So, given that some of those structural issues have improved, we certainly think there's more upside from the current valuation. And if I may take you through how they may get to price book 1 times. The banks are aiming for 8% self-help ROE by fiscal year March 26. The historical cost of capital may be around 7 to 8%, according to the bank's disclosures in May this year. So from a self-help ROE of 8% and cost of capital of 7 to 8%, that could easily come out to a price book of 1 times or above. And that's before factoring in any tailwind from BOJ interest rate normalization.